Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit the ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. So let's update our current view on the euro currency. That is usually daily time frame. What we see here. So finally market has turned to the retracement, although yesterday we said that it probably could not happen because that was the potentially bearish pattern on the intraday charts yesterday. That's why I recommend to place better the stop entry order rather than trying to catch and take the position right inside this pennant, since market was at support, and this risk that we have discussed yesterday has come. So you can see market stands now in the bounce move from the support area, but this is in general minor support. That is just the trend line. It's right here, you can see, and that is also just minor fib extension target from this ABCD pattern. So market should not show the significant retracement, significant bounce right after this minor support and minor target. And if market really intends to continue moving and complete this ABCD pattern, I suppose that this confluence support should hold the retracement up. Because if market will proceed higher and taking out of these highs right to the 618 resistance, this swing up will be greater than that swing down, and this will break the normal development of with the higher, lower highs and lower lows. This will be the higher high, and that will be not in a row with the development of the downward action. That's why, in fact, the level to watch for us is right here. It's 134.40, 134.60 confluence resistance. Also, if we measure the swings of this previous retracement, clone it and drag it to this current action, you'll see that this harmonic swing points on the same area. So in fact, the natural behavior of the market will be if market will finish bouncing, finish retracement right in this area. That's why this level is significant for us, and we should keep an eye on this level either for trend shifting to the bearish side on the intraday charts, or keeping an eye on the potential reversal patterns, the house hand patterns of the upward move right here. So we need to get some pattern, some signal that led us to enter on the short side of the market with the hope that market will accomplish this ABCD pattern. I don't know, maybe we should calculate, maybe this could be some sort of the free drive in perspective, but in general the point is the same. So we have to keep an eye on this resistance. That level will be crucial for euro currency, because if it will pass through it, that will be not very good for downward development. This will be not quite natural for price action behavior. In fact, this is some sort of our invalidation point for entering on the short side of the market. If market will break it through, especially with some thrusting acceleration on the intraday charts, don't be short. Wait for further clarification, wait for another signals what market will intends to tell us. We could count on the entering on the short side of the market only until market will hold below this confluence resistance area and will not exceed this high. So what do we see on the 4-hour time frame? On the 4-hour time frame, we see that our pennant pattern that is was formed yesterday. As you can see, since we have the contradictive moments, yesterday we said that we have some bullish divergence right at the support, but yesterday we also had this potentially bearish pattern. It was a bit contradictive. Our recommendation was to put the sell stop order rather than trying to take entry inside of this pennant or catching some retracement level. So you can see that was in general not bad idea, because stop order hasn't been triggered by the price action. Because how to place the stop entry order? You should place this order on the breaking of the consequence of high lows. Until market forms the high lows, you should not enter on the short side of the market. Hence, your order should be placed somewhere below the previous low in this area. Personally, I have placed the stop order below this low and it hasn't been triggered on the hourly time frame. I tracked this pennant on the hourly time frame. Since market hasn't broken this consequence of the high lows, then stop order hasn't been triggered and you stay flat. And personally, I was flat yesterday. Now we can see that market has shown the breakout of this pennant in the opposite direction. What it tells to us? This tells that market is ready to deeper move to the upside. Recall that from our weekly research that the first level to watch for that we have specified there was the weekly pivot point and 3.8 resistance 134.10. That stands very close to it. Now this area has been broken by the market. Measuring the harmonic swings that we also have measured on the daily time frame points on the next area to watch for that we also have specified in our weekly research. That is the confidence resistance. Here it's a bit different from the daily one, so it's a bit different to the upside. It's 134.60, 134.72 area. And take a look, weekly pivot resistance one. When the market breaks through weekly pivot point, the next resistance from this pivot framework will stand around weekly pivot resistance 1. So that is the next area to watch for. Okay. What particularly we have to watch in this area? We should drop our time frame to the hourly chart or to the 30-minute chart, depending on your depending on what you are looking for usually. Well, and first of all, we should keep an eye on the potential reversal patterns. That could be wedge, that could be head and shoulders, that could be butterfly sell, or something of that kind. If we will get this pattern, we could try to enter short, because market usually respects such strong areas of resistance, at least with small retracement. That will let you to put your stop on the break-even and protect yourself from the risk. If we do not get any patterns, we should keep an eye on trend. What we want to see? We want to see the shifting trend to the bearish side somewhere from this area and some starting of the acceleration to the downside. When this will happen, we will try to use the minor bounce, minor retracement on the hourly time frame, for instance, to enter short. Because in this case, we will not have any other tools to trade except the trend. And in this case, we will have to be focused on this tool, only on the trend. If we will get the pattern, well, we could stick with the pattern, because pattern is more preferable, because it let us and tell us where we could place our stop, where's the invalidation point of the pattern. That is a bit more comfortable to trade. Well, that is what we should keep an eye on. So the conclusion for current trading session is wait for reaching of that area. When it will be done, wait and watch for potential reversal patterns or bouncing to the downside and trend shifting to the bearish side on the hourly time frame. This bounce to the downside should be relatively fast, so some sort of the price action right here or right here, some acceleration. We need some impulse move in the continuation of the downward action. Well, that's what we have to watch for. If you want to make the scalp trade right to that area on the, for instance, 15-minute chart, I absolutely don't mind, but decide where you place your stop. Maybe you could place the stop somewhere below the weekly pivot point and this small flag on the hourly time frame. Or even if you will take a look now on the hourly time frame, you'll see that here is also the flag is forming. So you could try to possess yourself on the long side of the market with this bullish flag that is forming on the hourly time frame. Well, but calculate the risk-reward ratio. It should not be less than 1. So control your risk. This is only for scalp trading, not for marrying any position, because we are searching possibility to enter on the short side of the market currently, because our current price action could be treated only as a retracement just yet. Well, that's all for today. So let's see how it will turn, and watch for 134.60, 134.75 area, since it will be significant for the short-term perspective of the market.